Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This will get everything you need to know in 90 seconds at 9 o'clock, with news that the Fed has not moved fast enough to keep raging inflation in check. The headline news today is that US CPI hit 7.5% in January, a 40-year high. Although that was only just over what analysts were expecting, 7.3%, markets felt they hadn't priced in enough, so benchmark interest rates rose sharply, the US dollar slipped, and Wall Street is lower. American core inflation came in slightly higher too, at 6% from a year ago, although it should be noted that the January month-on-month rises were pretty much the same as the month-on-month rises in December, and lower than for both October and November. The chances of an outsized rate hike at the Fed's March 17 meeting is now high, maybe as high as 1%, and taking it to 1.25%. Meanwhile, US jobless claims came in lower than expected and lower than the prior week. There are now 2 million people on these benefits, back to pre-pandemic levels. And Japanese producer prices are still rising at a fast clip. They rose 0.6% in January from December and 8.6% in the year. Also rising at a fast clip is new lending at Chinese banks. The word has clearly gone out to get loans out the door quickly. Since these statistics started being reported in 2004, there's never been anything quite like this flood of new lending. Chinese banks lent almost 4 trillion yuan in new loans in January, a new all-time high and easily beating the market forecasts, and more than 3 times the 1.1 trillion in December. Their central bank is moving very quickly to boost lending to shore up the slowing growth in China. China lacks ideas on how to maintain their expansion. It certainly isn't self-sustaining at the moment. Stability is now their watchword. Aussie inflation expectations rose 4.6% in their February survey, up from 4.4% in January. But this just maintains the higher levels that have been reported in the survey from September 2021 onwards. Still, it will add fuel to the expectations that the RBA will be forced to move earlier in raising rates in 2022. New Zealand inflation expectation survey results are due out later this afternoon. And the US Treasury yield opens today at 2.03% and 12 basis points higher, and taking it to a level we last had in July 2019, 2.5 years ago. And the price of gold starts today at $1,842 an ounce and up another $9 from this time yesterday. Oil prices are up $2.50 at just over $90.50 in the US, while the international Brent price is now just under $92.50 a barrel. And the Kiwi dollar will open today firmer at 67.2 US cents. Against the Australian dollar, however, we've slipped back to 92.9 Australian cents. Against the euro, a little change to 58.6 euro cents. And that all means that our trade weight index starts today at just over 71.4. We welcome your feedback. Leave a comment below or on our website. Kia ora, I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.